Commodity stocks went absolutely crazy last week, though it does seem, at least after today, May 10th, there was a slight bit of a pullback, and so I thought it would be interesting to look and do a common size analysis between the 5 largest gold miners, 2 of which are both foreign stocks, and a discounted free cash flow comparison for intrinsic value. Now, let's get right into the video. Hey, my name is Dr. Kraus, and I'm a 14-year-old investor. In today's video, I'm going to be doing a comparison between the 5 largest gold miners. The reason I chose this compared to uranium to follow up my last uranium popularity contest video is due to the fact that most uranium companies just frankly aren't profitable, which for me personally, I don't really like that. I'm more of a value investor than a growth investor, though I'm willing to take some risk in growth stocks in the commodity space. And so, whereas gold miners, for the most part, they are all profitable, so I'm much easier able to compare all of them. But without further ado, let's get into what are these 5 stocks that I chose.
Alright, so I've got Newmont, followed by Barrick, then by Polyus Gold, then Newcrest, then Aginco, and their market caps are $54 billion, $42 billion, $27 billion, $17 billion, and $16 billion, respectively. Though, one thing to note is that Polyus originally traded in rubles on the Moscow exchange, and Newcrest traded in Australian dollars on the Australian Stock Exchange, so I did have to quickly convert those, as you can see right here. So there could be a very small discrepancy here with just the conversion. Once we move on to the PE ratios, it looks like just on the very surface, Barrick could be slightly undervalued along with Polyus compared to the rest of them with their low 17 PE ratios compared to 18 and in the 20s. If you love dividends, Polyus Gold certainly looks good, along with Newmont to a slightly lesser extent, not to mention they still have the second lowest PE along with this dividend yield, and so just overall I've just got them ranked by market cap on the side. That's not too important. Now, if you're wondering why I chose each of these, I simply went to Wikipedia, largest gold companies, and right here I skipped over Franco-Nevada since they're a royalty company, which I covered in my gold royalty comparison, which you should go check out right after this video. But we can see Newmont, Barrick, Polyus, Aginco, and Newcrest. I could have gone and done the rest of these, but then it would have technically been a top 9 when you're skipping over Franco-Nevada, and that's who likes a top 9? Top 5's a nice, easier number. Plus, that would have taken double the time, so... Alright, so first up, a common size analysis of their 2020 income statement, which is basically you take their revenue and you divide different line items by that revenue. And if it's in red here, that means you want that number to be as low as possible. And something to note is because Newcrest is Australian, their financial year ends on June 30th compared to December 31st, so this date is almost a year old. So you might then be asking, why didn't you do it quarterly? Well, Newcrest also doesn't do proper quarterly reports, which you can see right here. I'm just scrolling through it. There is not a proper balance sheet, income statement, or cash flow statement. I know I went really quickly, but I'm sure you can pause the video and see that that was the case. I saw that that was the case reading through it. Alright, so first, going over each of these in order, cost of revenue. And so you obviously want your cost of revenue to be as low as possible, since that's how much it's costing you to make your sales. And so we can see right here that the lowest cost of revenue goes to Polyus Gold. And though it might seem, oh wait, what's the rank? I'll explain why I put their ranks where I did in just a second. And so gross profit is of course the flip side of cost of revenue. That's why you want cost of revenue to be low as possible, because of course you want gross profit to be as high as possible. Now on to operating expense. This is what it costs to operate lots of the mines and corporate and whatnot. And so of course you again want this to be as low as possible. You want the company to be spending as little money as possible, while of course then bringing in the most income as possible. You'll also notice that operating income plus the expenses equals the gross profit, because cost of revenue is separate from the operating expense. And so of course, since you want that gross profit to be as much income as possible, you obviously want this to be lower so that this can be higher. And so we can see when we're comparing each of them that again, it does seem like that Polyus is in the lead, though Barrick's not too far behind with just 5%, though their gross profit was substantially lower than Polyus. And then of course Newmont and Aginco were far lower in gross profit earlier. Now on to interest expense. We of course want this to be as low as possible so we know their debt's very manageable. Here it looks like Polyus and Newcrest do have higher debt expenses, which isn't exactly a good thing, or interest expense, sorry, and which means their debt could be a little bit harder to manage compared to Newmont, Barrick, and Aginco with just 3%. Now on to pre-tax income, and so you can then see see, of course, that in order here, you can see that Polyus in first, again followed by Barrick, then Newmont, and Newcrest and Agnico Eagle. Then income tax expense, this isn't their actual tax rate due to the fact that this is a percentage of revenue, whereas profits are taxed. And so, of course, you want this to be the lowest as possible because you want the company retaining as much of their earnings as possible. And so you can see right here, Newmont is actually paying the lowest taxes and Barrick the highest. Although then Agnico Eagle, Newcrest, and Polyus all sort of in the middle. And then in net income, so this is the amount of money that's just flat out available to shareholders and the company after everything else is done and paid for. So this is why the ranking comes in, because this is obviously the most important part. We can see the highest percentage, nearly a third of their revenue is net income for Polyus Gold, which is quite good. Obviously in first place, followed by Newmont. Despite the fact that they had far lower gross profit, they managed to make it up with things like their interest expense and income tax expense and the difference between their operating income and pre-tax income and whatnot. Followed up by Barrick, but though again a 7% drop off. And then just barely behind them is Newcrest and Agnico Eagle. And then I just put Newcrest in front of Agnico Eagle due to the fact that its gross profit is still 15% higher. So you can see here, really looks great for Polyus, and Newmont also looks pretty good. Barrick kind of middle of the road, and Newcrest and Agnico Eagle not looking so good. Though to be fair to Newcrest, they didn't have advantage to a lot of the gold bull run that happened especially in August when it peaked, though June 30th that still got a decent amount of gold running. Alright, so I did the same thing with their 2020 balance sheet, which essentially you take total assets and you divide different line items by that, getting a percentage of total assets. Basically the same thing as before. So for each of these companies, they have obviously the majority of their assets as non-current, though by the time you get down to Polyus, it's actually quite a bit of their assets are current. Another thing to note is that cash and cash equivalents and is a part of this current assets part. So we can see at least that Polyus, even though they have a lot of non-current assets, they have a lot of cash that they could make up that number with, though. And then we can see here Agnico Eagle really doesn't have a lot of cash on hand, though they do have the highest amount of non-current assets, so it's very possible that they had just gone and spent that cash already rather leave it sitting like Polyus. Now, total liabilities, you of course want this to be as low as possible, and we can see that this is what I ranked them by, since this also includes total debt. And so we can see that for Polyus, even though their income was really good, their liabilities are just insane. Total liabilities is equivalent to 2/3 of their total assets, whereas before they were keeping a third of their net income, which was a lot higher than the rest of them. So right here, Polyus definitely lost a whole lot of points, and Barrick was middle of the road before, and now they've jumped up first. Newcrest and Agnico Eagle also jumped up from near the bottom, so it's possible these guys are more leveraged in debt and whatnot to bring in more money. But as then we can see here, current liabilities actually have in black, since current liabilities you can get off easily. Like for an example, you can see 11% for Polyus, 20% here. They could get rid of all these current liabilities right now, technically, if this is just like short-term debt and whatnot. Now, actually onto debt, and this goes for every company here but Agnico Eagle, their current liabilities are slightly higher. And then the remaining part of their total liabilities is the non-current stuff, which is really high again for Polyus. Now onto total debt. We can see that actually it does also increase as we go along, and that insanely high for Polyus, 49% total debt compared to, say, Barrick, just 12. And so we can then go through their current debt is almost non-existent for all of them except for Newmont and to a slightly greater extent Polyus. Then onto long-term debt. You can see, okay, this all looks reasonably manageable. This doesn't look way too high. If this was getting above 25% or so, it scared me, which Polyus, it definitely does, though I think this probably balances them out with that really great income statement. They don't have the best balance sheet. Though, something I also noted is that when you divide it up, 73% of these total liabilities are debt, so you might want to look into Polyus, say, because you saw that really good income statement, but really bad balance sheet. It's okay, well, how manageable does this debt look? Whereas, say, Agnico Eagle and Newcrest, they actually have quite decent, even Barrick to an extent, have quite decent balance sheets, whereas their income statements weren't nearly as good. So it also comes down to, what do you care about more, their balance sheet or their income statement? You kind of need to know more about the company for that, of course. Now onto their intrinsic value comparisons. So discounted free cash flow. First up, Polyus far and away in a massive first place with an intrinsic value. I don't know. I made a second one that used more conservative numbers, but we can see right here, over 3,000 1,000% increase compared to where they are currently trading at right now, which again sounds insane, but again I made sure to get a more scuff discounted free cash flow. And something else to note is that no, this isn't in rubles or anything like that, since when you go to their Polyus annual report, it is in US dollars, as you can see right here, so not messed up or anything there. And then so we can see that 3,000% up because they're trading at 200 when you adjust from rubles to US dollars. And then Newcrest in second place, which, so that one also seems like, okay, well, Newcrest has a good balance sheet, poor income statement, but really good cash flow or discounted free cash flow intrinsic value. Then same thing for Polyus, it seems, oh well, they're really undervalued, but at the same time you got to worry about that balance sheet. But then at the same time, really good income statement, you got to balance it all out here. I kind of made a little point system at the end to help make up for that. And so we can definitely see that, hey, maybe these two are more undervalued due to the fact that this is on a Russian exchange and this an Australian exchange, which these are all on American and Canadian exchanges, so they have a much larger demographic that they're able to be bought up by. So we can then see it's still really high for all of them, even for Barrick. And then once we get down to poor Aginco Eagle, it's not looking great for them. And I even adjusted their numbers to try and make it look better to give them a fighting chance. It was still not great. So now, here's what I mean. I kind of flipped what I did, sort of, is for originally, I had taken their 4-year average profit margins and free cash flow to profit margins. And this time I used the minimum positive number, whereas for Aginco, that was flipped, since their averages were lower than their minimum positive number, since they had some poor years. And so we can see that it gets even worse for Aginco Eagle, and almost just flatline for Barrick, like almost within a margin of error almost. Definitely not a margin of safety. Then Newmont and Newcrest both still look really good. 78, 88%. That's still crazy, especially for Newmont with how massive a company they are. This would make them with what, I'm just doing this in my head quickly, but probably over a $100 billion market cap, or it would be really close. And then on to Newcrest, then you can see still almost a double here as well, and then with 88%. And then by the time you get to Polyus Gold, it's still insane. And I scuffed the numbers here to try and make it more reasonable, and it's still insane. But again, likely these two are the most undervalued due to being on non-American exchanges. And I'll quickly show you kind of what I did to adjust the numbers between the conservative and liberal discounted free cash flows. So, first off, I didn't make this. This was made by Learn to Invest, the YouTube channel. I'll make sure to link down below their video with the explaining how to use the sheet and whatnot. And so, you can see basically what I did here was that, okay, right now I've got the more conservative numbers punched in, which I took their lowest net profit margins, 5.67%, as well as their lowest free cash flow to profit margins, and punched them in here. And then you can see this gave me $40.26 for, this is Newcrest, of course, by the way. And then when I change these numbers up to the averages, you can see that their averages are generally higher than that, and it's likely that lots of these will increase as gold price goes up, which is very likely, at least in my opinion. You of course have your own opinion on that, and then you can see their price jumps up a whole bunch more. If you kind of want to see how this works, you gotta punch in a whole bunch of numbers here. Because I didn't make this spreadsheet, it's all nicely calculated for me. And essentially you kind of go over here, and this, obviously there's more in-depth math behind it, but Excel has it auto-calculated. But again, check out Learn to Invest channel for that. I learned basically everything about stocks from that channel. He's great for analyzing stocks with fundamental analysis. So now that I've kind of shown you what I did to change the numbers between them, I just wanted to do one quick example. And Newcrest was fair since they, did really good, but at the same time weren't this. And so now let's get into their total score. Basically, as you can see here, rank 1 in any of the previous categories got them 5 points, except for just the stock intro and their basic market cap. That doesn't really count. And then rank 5 was 1 point, and so of course all through the middle, rank 2 was 4, etc, etc. And so you can see in first place we have Polyus Gold, which definitely makes sense after you saw first, and first, though fifth. And so then followed up by Newcrest, which of course, if you looked at those discounted free cash flows, makes sense. Followed by Newmont and Barrick tied, though I put Barrick further back due to the fact that Newmont was substantially ahead percentage-wise in the discounted free cash flows. And then poor Aginco Eagle well behind the rest of them, especially obvious when you look at their discounted free cash flows. Anyways, I hope you enjoyed watching this video. If you want to go check out my gold royalty comparison, make sure to go check that out. It's on screen now. Smash that like button, all that good stuff. I'm working on looking into what webcam and microphone I should get so I can do more videos like this without it looking and sounding so terrible. Alright, see you next time.